Are you tired of waiting for the perfect time to buy a house as you're waiting to save for interest rates to come down or house price to drop? You don't have to wait any longer. I am going to talk to you today about a program that is available that will reduce your interest rate for the first 2 years of the loan. And I'm joined by one of my preferred partners. So let's go ahead and dive in. Maybe. Welcome back. I am North Carolina licensed real estate broker Chris Cox, and I am joined today by one of my preferred lender partners, Tony Teffe of One Real Mortgage. Tony, thanks for joining the video today. Tell us a little bit about yourself.
Yeah, absolutely, Chris. Thank you for having me again. I'm Tony Teffe. I'm licensed in Michigan and 13 other states, including North Carolina. But I've been in the industry for about 11 years now, from purchase to refinances to running teams and sales teams as well. And like I said, I'm very excited to be here today.
Awesome. Well, thank you. Thank you for joining us. You are a great friend of the videos here, and I just love kind of just chatting with you about some of the latest and greatest programs out there. And this is one that we're excited to talk about. I know you've talked to me several times about this one. Today, we're going to talk about the Welcome Home Rate Break program, which is a lender paid rate buy down program that is available for those who qualify for this program. So, Tony, what can you tell us about this Welcome Home Rate Break program?
Absolutely. So the welcome home rate break, I guess, is just the fancy word for the temporary 2-1 or 3-2-1 buy down. But what's special and unique about this is that it's covered by the lender. See, Chris, 2 years ago, when rates went up after COVID, lenders came up with a very clever way to put home buyers into homes with more affordable payments. It was called a temporary buy down, where, let's say, for example, it's a 2-1 buy down, then the buyer would have a 2% less in interest for the first 12 months or for the first year of the life of the loan. Then for the second year, they would have a 1% rate discount, right? And then on the third to 30th year, it just goes back to whatever the rate is. The great program, who doesn't like a rate break for the first 2 years of the loan and save a couple of $1,000s? But there was an issue. There was a cost associated with this buy down. Could be anywhere between six to maybe $9,000, depending on the loan amount. And there was only two parties that were able to pay for the cost. One, the seller, where it's very tough in the seller's market, right? And two, the realtor. So you, Chris, you would have to grab.
I don't like paying for that.
So that program did not take flight like everyone expected, right?
Yeah.
Recently, one of our lending partners that we work with, one of 23, came up with this welcome home rate break, where it's exactly what I just explained. However, the only difference is that the lender is actually picking up the tab on this.
So I love that. Yeah, it's a phenomenal option out there. And just to clarify too, and I think we'll talk about this here in a minute as well, but it's immediate savings. They see that real savings during the first 2 years of the mortgage. However, they still have to be able to qualify for the entire regular monthly payment on that. Am I correct with that assumption?
Correct, exactly. So qualifying, yes, we have to qualify with the original payment. We call it the qualifying payment with the qualifying rate. But yes, the effective payments that are going to take place for the first 2 years are going to be the reduced payments.
Okay. So how does one? What are the some of the qualification criteria for this rate break program, and especially the lender paid part of it as well, right?
The most important part of it,
Yes,
right?
exactly.
Absolutely.
Yeah.
So so to qualify for it, it's not that difficult. One, and this is one of my least favorite ones. I wish it was open to all loan amounts, but I don't make the rules. But the maximum loan amount for this program is $350,000. So if someone's buying a $400,000 home, and they could put 50,000 down, great. Maybe someone buying a $360,000 home, they could put 10,000. That works as well. And there is an income limit to it. And the income limit in the state of North Carolina, I believe the 80% would be right around like $97,000. But I would always double check, right, with the Freddie Mac website I've showed you, because
Yeah.
per city, sometimes the home is different.
Yeah.
So yeah, loan amount under 350. income limit under 80% of the area as a median AMI. And it has to qualify for, with that third bullet right there, home possible, home ready, which basically this is just for clients that have that income limit under that certain amount. And what I love about this, though, that it is not only for first time buyers. So if you have someone selling and buying the week after, they qualify for this immediately.
Yeah. So and in that case, they could be it could be a $600,000 home if they put $250,000 down on that, right? If they've got the money coming from that other house, maybe they're downsizing as an example.
Yep,
Is
and
that
100%.
okay?
And that's
So
the scenario
it's just
that.
that maximum loan amount is 350. And as you mentioned there, that income limit for Wake County, where I primarily serve, and as well as I believe New Hanover County on the coast is about the same. It is that 97. If you get a little further out, I want to say into like Durham County and other counties, it's a little lower. Again, it is based on 80% of the area median income for that. So that's how they qualify. What does this look like on paper for someone? That's what I want to talk about next. So we've got a little slide here, just kind of shows like the actual amount that an example of that $350,000 max loan limit would look like in actual monthly savings. So what do you got here, Tony?
Yeah, absolutely. Numbers. I'm a numbers guy. I love numbers, and thank
You're in
you
the
for
right
putting.
field then.
Yeah, yeah, right. Well, thank you for putting this here. And so, like you said, this is an example of, a $350,000 loan amount. Let's just say today's interest rate is a 6.875. So this buyer is qualifying with $2,299 mortgage payment. That, of course, does not include taxes and insurance. We're just going to look at principal and interest.
Mm-hmm.
Now, if this buyer qualifies for the welcome home rate break, congratulations to them. So now we're looking at the first year, right? So the first year, year one, you're looking at an effective interest rate. Remember, it's the first year is 2% reduction. So now
Mm-hmm.
instead of 6.8, they start with the 4.8. Their principal and interest monthly payment is 1852, which is a monthly savings of $447.02, right? So over 12 months, that's a total savings of $5,364. The second year, just like the first year, but instead of dropping 2%, it'll only drop by 1%. The payment is going to be $2,070, which they're still saving $228 monthly. Averaged over 12 months, that's 2,746. So total savings in the first 2 years of the life of the loan for this first time or repeat buyer, they're going to be pocketing $8,110 over 2 years. So.
And this didn't cost them a thing. And just to, kind of take it down a little further, like that year one, $447, maybe that's a car payment, right? Now you're able to pay off that car so that year two, you don't have that car on there. And, you're getting to that year three where that payment goes up. Maybe it doesn't hurt you as much because your total overall debt you've been able to pay down because you reallocated that money that you would have been putting into a mortgage into other debt, and it's going to put you in a better place there. So, yeah, that's phenomenal. And like you said, the way this program originally rolled out was the seller most likely that was going to have to, subsidize that rate buy down. And in a seller's market, like you said, that wasn't happening as much as maybe that it was intended to do. So awesome. It's an incredible program. What else do you have to say about that? Anything else you want to add?
Honestly, like you said it earlier, people try to time the market sometimes. I've been doing this for 11 years. I still don't consider myself a market expert, right? It's not my expertise. And, it's tough to time the market. If we could all time, if I could time the market, I wouldn't be doing this for a living right now. I'd
Yeah.
be retired by now, right? So this welcome home rate big program is really going to help people get into the home for the first 2 years without worrying about where the market is. Even if, think about it, even if let's just say next year rates go up to 7%, right? 2% reduction, we're putting you for the first year at a 5%. So it's a phenomenal program, and hopefully people take advantage of it more than.
Yeah, absolutely. So if someone does want to take advantage of this program, how would they go ahead and get started in a conversation with us?
Yeah, just QR code right there. Give us a call, email, text, whatever. You're gonna be putting all of our informations in the bio
Yeah,
right
so
there.
there will be so there will be a link to all of our contact information as well as a direct link if you can't get the QR code to do what you need it to do or you prefer it on a desktop. Like I do, I prefer to do things on the desktop myself. I can do a lot on my mobile phone. I prefer the desktop for certain activities, and this would be one of those. So yeah, all of our contact will be in the link there. Again, Tony, I appreciate your time and sharing your knowledge about what's going in the market, and I look forward to doing some more of these with you as more programs keep rolling out.
Yep, I look forward to it. Thank you so
Awesome.
much.
Thanks.